All right, sick. All right, I wanted to get on here and talk about a big thing that is holding me back from trading, and it can definitely hold you back too if you don't use it correctly um, and manage it correctly. Is your uh, what is it? Sorry, your emotions, right? Your emotions. And what I mean by this is like bringing your emotions into live trading, and even with paper trading, you can have emotions. It's like a big thing with everything. Um, so you kind of just need to like when you're going into trading, you need to sort of leave your um, emotions just outside of it, because if you're bringing your emotions inside of a live account, such as um, a funded account or just with your own capital, it can be very very devastating. Like it just can affect your trading a lot, because you're coming into trading with a lot of emotions, especially on a live account, and you're like, oh, I don't want to lose all this money, right? And if I lose all this money, then I have to restart, and that's losing money out of my wallet, right? Then you start trading with just all these emotions that are gonna kind of give you second guesses on yourself. Um, and that happens to me a lot, and it causes me to kind of miss out on trades that are just perfect and um, are good. And a big thing that I've noticed is that um, if you can trust yourself with your strategy that you've learned, then you'll be fine. Uh, just trust yourself. Don't go out of your trading plan and overtrade. Try to get money back. Right. What I mean by getting money back uh, is like if you lose two trades, right, $200 each on a 50K funded, right, you're gonna be down $400. That's if you want to think about it, that's not that good, right? It's not good to start off on an account where you lose monies first. Um, and most, a lot of people will be like, "Oh, I need to get this money back. I'm gonna stop." Like right there, that's gambling. Like if you're going to go into trading connected with your money and scared to lose money and want to get it back, just please don't get into trading, because that's going to create just a bad mindset, really. Um, it's gonna have you go into these things with fear of losing money when you need to go into these things with knowing you are going to win. Okay, so what I'm saying is trust yourself, trust your strategies that you've learned, and I mean, and as like with trusting yourself, you should already be profitable going into funded accounts off of paper trading, fake money. You need to prove you to yourself that you are profitable, and you don't need to be worried about losing money because you are profitable. So if you are not profitable and you have a connection with your money, please just keep paper trading, right? And you need to have some capital to be getting into funded accounts, right? And this will help you out a lot, because if you have $150 and you buy $100 account, you're gonna be like trading on like life support. Like you have $50 to your name. That's not good, bro. What are you doing? You need to have a good amount of capital to even start, funded accounts, so you can have money to play with, and you can have money just to basically throw away. You want to think of it like, I'm not getting anything but learning, like knowledge from this necessarily. Just have some money you can like play with, please, like, because it'll help you so much, because you're not going to be connected to the money. Um, that's a big thing that can help your trading out a lot, really. Um, so just leave your emotions on the front door, right? Before you're going into trading. And then that's like the whole, you know, uh, kind of just a motion thing I wanted to go over. I also wanted to go over an example of, using your emotions to trade, right? We'll go in today. Today was Tuesday, Tuesday, November 12th. I have a good example here. I woke up at 5 today. I didn't look at charts till like 7. So about here. I saw this go up and I'm like, okay, my bias could be bullish. But what I go by is, if you are going to go into pre-market and get your bias before market even opens, don't do that. Once market opens, get your bias, because that's when everything's done kind of moving around and actually is going to start moving in, like when banks are starting to do stuff, because banks move the markets. When it's after markets, banks are just not going to have as much, volatility, even though it looks like there's a lot here, but it's just unpredictable. So I went into 7 o'clock, looked at this, said maybe I could be bullish, right? Because went up here, kept going up. I'm like, bullish. But I'm like, wait, okay, because there was a big retracement and then equal, right? But what led me to my initial bias was bearish because of this liquidity sweep. Beautiful liquidity sweep. And with a liquidity sweep, you don't want to be just entering off of the break of structure, or breaking above highs, because it could just keep going high. You want this rejection, this big long wick, right? But because if you're going to go into that and just click sell or click buy, you're not going to do well unless you get lucky. That gave me my bias. I didn't really take any trades today. Took one, but blew my funded account, because my teacher made me close my Chromebook and I didn't have a stop loss. This rookie mistake, but I'll give you guys an example real quick on how how emotions can affect your trading. Okay, so you go in here, say you traded 730, which wouldn't be the best idea, but say you did. Fair value gap marked out, right? You have your fair value gap, right? It broke structure, so you can also add equilibrium. Equilibrium is basically just price comes into a discount. So low and so lowest part of those, and right there is highest part of there. I personally in this trade would just trust, if you're going to trade now, is trust, I would go off of equilibrium, because equilibrium is good for like over here and stuff. For this, it doesn't need to come down into equilibrium to keep going up, right? It's a continuation confluence, right? It doesn't need to come down and hit it to keep going up. This fair value gap, though, you see this rejection off of this fair value gap is nice, so you can take a trade off this. If you took that trade, right, you took this off this wick, and you're like, damn, it's going up, and you're up $300. You're going to be up $300. You're like, okay, I'm comfortable now. I'm not going to have to worry about this trade losing, right? You go on your phone, you're looking at Clash Royale, playing a game. You look up, you're down at almost break even. So this is where the emotions start coming in. You're like, oh my god, I gotta get out. My $10 is gonna go down. I'm gonna lose. But that's where you just gotta like shut it off, because if you have a good strategy and you trust yourself, then there's no point of getting out. Because if you want to learn your lesson, let the trade fail, because at that point you're learning a bigger lesson. It's gonna hit your stop loss. With your trading plan. Now, if it doesn't go near your stop loss, what are you doing? Your trade is still active. You're still going to be in a chance to, go in the price where you want it to go. And say you got out right here. You got $10, maybe break even. When look where price went. Boom. Fucking just went up. Price just fucking went up. You could have made a good grand, right, on a funded account. Maybe 800 if you can't make more than a certain percentage. So that is where emotions can play a big part, is just that type of situation where you're going to be coming break even. And now you're like, shit, $10 And then say you lose a trade, negative 190. Now I got to make that money back. I got to make the money back. Well, I can easily make 190 if I over leverage. It's just a couple ticks. Like, just stop there. Please, if you're going to do that, just stop trading. That's gambling. That's gambling. It's just fucking you being an idiot, honestly, at that point. Just fucking idiot. Just close the Chrome or close the Chrome, whatever you're using, close it. Right? Take 2 trades, take 3 trades. That's your trading plan. You lose your money, you lose your money. Right? Because it's your money you're going to play around with. You don't care if you lose it. Right? And also, if you're going to go try to make that money back, if you don't listen to anything I'm saying, please say, like, okay, you thought this was going to sweep. Like I said, you thought it was going to sweep, but you didn't listen and there was no retracement and you just pressed buy and it hit right here on your minus 200. Please don't go ahead and say, oh, let me just sell again. And it's all the way down here and you're like, let me just sell. It's going to go down. Because look at, or you're going to go right back up because you're so hyper focused on that certain area that you couldn't go over here and simply mark out. Oh, look at that. Perfect setup, right? You're just going to be focused on that one point because you're just focused on getting money back. Please don't trade if you are going to be going and trading with emotions. That's what I did today. That's a good example on how to use your emotions and what not to do in the market. So